Yeah, and you had a chance to look at that. I haven't. I've been making videos all morning.
I have. Came out at 8.6%. CPI came out this morning. That's higher than what was expected. That is the highest inflation reading year over year in 40 years.
Very nice.
So, yeah, it's not exactly what we want to see. Listen, all of us as consumers, we want to see this under control, right? We don't go to the gas station and not cost $100+ to fill up your car, or go to the grocery store and feel the impact there. But
so our competition, our direct competition, Redfin, Zillow, and all these other guys with Realtor.com, they're spending money here. But where we win is if we go into the niches, into the long tail keywords, right? So here, I wanted to show you that. Let me go back to this, because as soon as the ad pops up, I click on it.
So hey everybody, it's our bi-monthly. This is the what are we in? We're this is the first time we're doing this in the new half, right? January, February, March, April, May, June. Oh no, we still July is when it starts. So take that away. But here we are doing our monthly market snapshot with David Childers from Keeping Current Matters. And why this is important is because what Keeping Current Matters does is takes really difficult to understand data and breaks it down to palatable pieces so we all can understand it and relay that to our clients and to our sphere of influence and to the community base in general, so we have an understanding of what's happening in the real estate world on a national level, because it does affect us all. So David, welcome. How are you?
I'm good. Thanks, Johnny. It is almost halfway through the year. We're in June 10th. It's hard to believe, halfway through 2022.
It flies. It just really, time flies. My mother used to say that life is like a roll of toilet paper. The closer you get to the end, the faster it goes. And she's right.
It's a good analogy. Well,
right.
Excited to be here today. See everybody joining. I see the attendees on Zoom. Johnny, I think you look, see folks in the Facebook group as well. I would say, as always, what questions are on your mind? We're going to talk about some of that halfway through the year. What can we expect going forward? I'm going to talk a little bit about interest rates and inflation, everything coming out today on inflation. We'll talk about that. A lot of questions, I think, on that. But Johnny, I think the job we have right now is to get the best information in the hands of people. And a lot of people have a lot of questions. What's going to happen with all of this, with rising interest rates? Price reductions happening. We're seeing a lot of that. Seeing a lot of headlines, the great deceleration, cooling of the housing market. Talk about that. So a lot going on out there right now.
A lot of interesting stuff, and lumber is down, to a reasonable price, right? That was the big headlines I saw. And what was supposed to come out today, and I don't know if it came out. My buddy Saul says, we can't look at the data on a month-to-month level per se, month over month, when we're talking about inflation. We got to look at it at a longer point in time. But they were supposed to release today. I believe it was 9:00 Eastern Standard Time. What the current inflation and stuff looks like. So
let's talk about that. That came out this morning.
Okay? Yeah, and you had a chance to look at that. I haven't. I've been making videos all morning.
I have. Came out at 8.6%. CPI came out this morning. That's higher than what was expected. That is the highest inflation reading year over year in 40 years.
Very nice.
So, it's not exactly what we want to see. Listen, all of us as consumers, we want to see this under control, right? We don't go to the gas station and not cost $100+ to fill up your car, or go to the grocery store and feel the impact there. But
hard to be a buyer's agent.
Say again?
Hard to be a buyer's agent right now.
Yeah. So inflation rising. Let's talk about that. Impacting the stock market right now. The Dow's down interesting thing. We're going to talk about interest rates. If you remember a couple of weeks ago, if you were on that call, I had a slide on the front end of it, Johnny, said it's all about interest rates right now, right? That's what the first half of this year clearly in real estate's been defined by. So let me give a little bit of update there, because I think this is important relative to where we sit right now and what we can expect given this inflation reading. So let me figure out here how to share my screen here in my office today, not over in our studio. Bear with me. Sorry, Johnny.
Oh, don't be sorry. I'm okay. I'll talk while that's going on. So
okay, here you go. I'm ready.
Okay. All right.
Issue with my.
See, even the king has issues.
I don't know about that. Yeah, this is a live show, right? So, start about mortgage rates. This is as of yesterday. We like to look at the Freddie Mac weekly monitor for interest rates. This is obviously a rear view mirror sort of look. The last week, average 30-year fixed 3.23%. I'll show you that graphically. The graphic we always use on that. But Sam Cater says after a little movement in the last few weeks, mortgage rates rose again on the back of increased economic activity and incoming inflation data, which you just mentioned, Johnny, released this morning, higher than what was expected. The housing market is incredibly rate sensitive. So as mortgage rates increase suddenly, demand again is pulling back. The material decline in purchase activity combined with the rising supply of homes for sale will cause a deceleration in price growth to more normal levels, providing some relief for buyers still interested in purchasing a home. Two things we've been praying for, Johnny: more inventory and less, price appreciation. Prices appreciating extremely fast over the last couple of years in real estate. And we are certainly in a market where we're seeing a shift, and we're seeing that happen. With inflation coming out, this core reading, I always say, and I think the way to think about this simply and effectively and maybe communicate to your clients, inflation is the enemy of long-term interest rates. So, the thing we don't want to see in the real estate business relative to the mortgage process is this feeling that inflation's not under control, means the Fed has to step in. That means more folks getting uneasy about that, and that will equal, most likely a rise in interest rates. I think trying to predict rates right now is incredibly difficult. You go back to this graphic, I used it last week when we talked. Latest rate 5.23%, but very clearly since about the third week in April, we've been moving in this horizontal pattern versus up. Now, rates, can either go up, it can remain the same, or go down, but clearly this plateau over the last few weeks. It wouldn't surprise me with rising inflation or this feeling of inflation's not under control, that we see rates start to rise a little bit again. But again, I'm not here today to try to say, okay, here's where we're going to be, or have a crystal ball in any relative matter for that, because I think you're going to have to look at it and see. But no doubt we're coming out of this time when rates were incredibly low over the last couple of years, and we're feeling the effect of that shift in the market. Mm-hmm. I think one of the best ways, Johnny, that I've seen to sort of articulate this to folks we're working with is this article out of the Washington Post. It says the low rates of the last few years were an anomaly. They were an anomaly. They were historically low. Haven't seen them in the past, and likely not to see them, in the future for a long time. They're going to say a combination of freakishly low interest rates and Federal Reserve intervention in the bond market and mortgage-backed security market. Now, the Fed has ended quantitative easing and is raising rates. That's the Fed funds rate. But what really matters is what happens to the 10-year bond yield, because that determines mortgage rates. So this morning, after the CPI was released, higher than expected, the 10-year Treasury yield has been rising. We'll see what happens there. Certainly an indication that we could see a rise in rates. A couple of things I want to give you that are important here. And as always, I'll send these slides to anybody that wants them. Email me at david@keepingcurrentmatters. I'll send these over to you. Why is this important? A couple of slides you can use as you talk to your clients about this. For the last 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury rate. There's a symbiotic relationship. As they go up, as they go down, 30-year fixed mortgage rate follows the 10-year treasury. You want to know what's going to happen with rates? Watch the 10-year treasury. You can literally Google it, just look and say, okay, are we going up? Are we going down? You don't have to have a PhD in economics to make sense of it. You can watch what's happening. On average, over the last 50 years, 1.7 is the difference between the 10-year treasury and the 30-year fixed. Now, that's not a scientific way to look at it, but if you were to take the 10-year treasury, add 1.7 to it, that gives you your 30-year fixed on average. So that's certainly not going to be an exact indicator, but you can tell, okay, what are we looking at? Are rates likely to go higher, or what's going on in the market?
Mhm.
The one slide, Johnny, that we produce here at Keeping Current Matters that I would be using is this slide right here: homeownership as a hedge against inflation. Inflation is going to be talked about a lot over the next week, next month, and what we want to hear is that inflation is starting to be tamed and gotten under control. And certainly with today's information, that does not appear to be the case. The blue here going all the way back to the 70s, blue's the average inflation rate in the decade, average home price appreciation in that decade. And you can see in just about every decade that home price appreciation has outperformed the inflation rate. Some years neck and neck, a couple of times, in the 2000s, inflation rate was slightly higher than home price appreciation, but we know there was something else going on in the housing market in the early 2000s. Obviously, the last couple of years significantly outperformed the inflation rate. Will again this year, based on what we're looking at, what experts are forecasting for home price appreciation. I would not use this, even if you've seen it before. If you haven't seen this from Keeping Current Matters, maybe your first time, this really articulates the value of being invested in housing in inflationary periods. Most economists, most experts would say you want to be in hard assets like housing during an inflationary period. And so that's key to remember. Turn it back over in just a second, Johnny. But one thing that I think makes sense here: if you're looking to buy a home, I would still recommend you do so, even though they're higher interest rates. We have no reason to believe that home prices will stop appreciating. Home values going up is only a problem when you're trying to buy. When you own, it is a gift. So, inflation causing a lot of questions. Johnny, we're here. We started out at the beginning of this call saying we're halfway through the year. In a minute, we'll talk about what's coming up in the second half of this year. But I think inflation is going to continue to dominate what happens in housing, and really, truthfully, how people feel. Our economy is driven on confidence.
Mhm.
And when folks feel like, it's costing more to do this and costing more to do that, they start to pull back. That's, it happens. So
When they pull back, that's the whole trickle down thing, right? It pulls back from all over the place. And I am seeing people not go out as much, stay home. I mean, and going through the pandemic actually facilitated that, right? Because you couldn't go out. Now all of a sudden people learned how to cook, and man, I cook stuff off of TikTok videos all the time now, but people definitely are staying home. But the slide that you showed, that 11, almost 12% insulation between what the home price appreciation was and what the inflation was is absolutely powerful. And that's money. And to talk about home ownership, to me, home ownership is the best investment vehicle. I know some people will disagree, and that's perfectly fine. We're all entitled to our opinions. You got to pay somebody, right? You got to pay somebody to live in the house.
Right.
Might as well pay yourself, because in 20, 30 years, I mean, look at it, right? People were able to refinance their homes and buy RVs or second homes or camps or whatever they were able to do. They were able to impact the quality of life, where that was the gift that you're talking about, where if you're coming in to buy for the first time, it wasn't a gift, right? You had to come up with more money down. I do believe inflation is going to continue. I don't think there's anything in place to curb it. Again, this isn't anything political. It's just what's going on in the world right now. There's lots of world economics to take into consideration too. But home ownership, and this is the thing I think, I've been seeing around LabCoats and some other places too. People are saying, buyers are saying, we're just going to hold off. We're going to hold off till prices come down.
Yeah.
I don't think they're coming down anytime soon. If they
No,
do,
I'm not
they're going to
talking
come
about
down
that. We've got some
minimally.
recent
right?
information on that, but I think it's a sentiment and a question and a thought that we need to be prepared for. You know, the thing I always say, Johnny, is if I wasn't in this business, I might be thinking that, right? I don't think it's something that you look at somebody and go, "What? How would you ever think that?" Right? Let's think of the rational aspect of it. Prices have appreciated. Even us in the business are like, can this hang on and happen? Oh, by the way, now we're hearing we have inflation and we're going to go into recession. That's a logical thought process. So, you know, when we were together last time, I talked about the difference between perfect advice and expert advice. And I think a lot of people are getting hung up on that right now. Nobody can give you perfect advice right now. What you can bring is a perspective as the expert in your local market, right? You can bring that expert advice. So let's talk about that expert advice relative to what's ahead. You know, I chose this picture, Johnny, the crystal ball. Nobody has a crystal ball, but we're going to do our best to say what does that look like coming up. So give you a couple of things to look at here on that. First, coming from NAR, the Fed's tightening policies of restoring price stability will continue to put price pressure on mortgage rates in the third quarter. So continued upward pressure on on mortgage rates in the third quarter. Not here today again to say, okay, this is when or where they will be, but expect the Fed's action specifically to tame inflation to have an effect on mortgage rates. And it looks like the action they've had is not slowing inflation down. That's what we want to see, right? We want to see inflation. Okay, we're starting to get this under control, and that'll be the marker, even more so than the Fed. Fed's only acting and responding to that. So something else, many people saying, okay, what's that going to mean to the business? We talked about this a little bit last week, but existing home sales forecasted somewhere in pre-pandemic levels is what I would say. So we came out of the last couple of years that were anomaly years in the business. And, before the pandemic, sold roughly 5.3 million homes pre-pandemic, and somewhere in that neighborhood. So very, very good markets in 2017, 2018, 2019. We're going back to a market somewhere like that. So I think all these headlines and things about, the real estate boom is over. The last couple of years were an anomaly. And I think thinking about those years as that is going to be most helpful in helping our clients to see that. Because if you look at existing home sales and you look at total home sales that are forecasted, the average of forecasters is about 6.5 million homes. To put this in perspective, last year, Johnny, we sold 6.9 million homes in this country. A lot of this is going to be dependent upon the second half, but this is the latest forecast. And here's my point. This number of transactions represents a very, very good year in real estate. And I guess my coaching right now is you're getting the message out there. You're seeing a lot of headlines. You're seeing people talk about, what's going to happen in real estate in your office. Be careful who you listen to, because we're stacking up for a very, very good year this year. And I don't think that any of the headlines are going to be out there going to sort of support that. Bad news certainly sells a lot quicker and a lot more than good news sells. National and local headlines like this: the cooling housing market enters the great deceleration. Home prices decelerate as the housing market downshifts. Just in this world that we live in, where people read a headline, they don't read the article. They sort of go, "Gosh, this doesn't sound good. This sounds like homes are going to lose value, or we're going to be in a world of hurt relative to this." And oh, by the way, add price reductions. That's getting a lot of attention now too. Hey, sellers are having to lower their price. One thing I would say right now is, first of all, homes are still selling incredibly fast, oftentimes in a multiple offer scenario. And certainly people on today could add that into the chat or add that into the comments, what they're seeing. But the one thing I would say is deceleration does not mean depreciation. And hopefully everybody on the call and everybody, that's in this business understands that, but we can't assume that the clients we're working with, that they understand that homes appreciating in the last couple of years north of, 10, 15% coming into a year right now. And I'm going to go into what forecasters are saying, right at around 9%, still very, very healthy for residential real estate. If you look back historically, very, very good investment, very, very strong appreciation forecast. Matter of fact, Johnny, as we look at the home price expectation survey coming out of the second quarter of this year, this will look at this year and the years to come, all the way through 2026. What do experts and economists say about home price appreciation? This year, 9.3% is what the home price expectation survey. This is a survey of over 100 economists, housing market experts, and then moving into what I'm going to call more normal appreciation in 23, 24, 25, 26. Why is all of this this way? It's because there's still an undersupply of housing units on the market for the number of people that want to buy them. So we're looking forward, people saying, should I buy a home right now? This is a graphic you certainly can use to help them understand that, help them see what's at stake, help them see what home prices are expected to do in the coming 5 years. I'll wrap with this slide right here. Washington Post said it, I think, best. All of this suggests that you can't time the market or future of interest rates. If you're waiting for rates to fall, you may be waiting for a long, long time.
Oh,
for the bottom line right now. Say again, Johnny.
For sure, you'll be waiting for a long time. You know what I mean? One time in history, they've been that low.
Yeah.
Right. I don't know when they've ever been that low before.
Yep.
I think it was 2011, David. I went to KW's family reunion in Orlando. So whenever it was in Orlando, I think it was 11 or 10. And the State of the Union, or whatever they call, when they talk about the economics, was that it was going to have normal appreciation until 2019, 2020, and then there was going to be a price correction, right? It went completely opposite of what anybody predicted back then. And I'm no fault to them. I'm not saying that. We even come back, and my broker and OP at the time, or OP and partner, would present that too, but on a local scale. And one of the partners said, I think it's going to have a correction a little bit later, maybe 2021. Even that, we're still, so all this economic data, all these traditions, all these things are our best guesstimates, right? Nobody ever predicted rates were going to get down to 2.95% and the price of properties were going to increase 18% month over month, right? Nobody thought that. So all we can do is look at the historical trends, the historical data, make our best judgment based upon that. But at the end of the day, rates are not going to drop back down. We were spoiled. Hopefully hopefully you're able to capitalize upon that. And I just don't ever see them going back down like that in the near future. And prices, I don't think there's not the economic factors that existed back in 06, 07, 08 that caused that crash. It was a lot of fraud that was involved. And, with the way that they've changed the lending guidelines and everything else like that, and the qualification process, we just don't see it. Right. Yeah. I just don't think we're going to see that crash. Yeah. So if people are waiting for any of these two things, they're going to be waiting for a long time.
Yeah, and a lot of people have skin in the game, to the degree they didn't have back then. I want to make a comment on Jessica's post in Facebook. Agree 1,000% about the impact of local information on that. Two things I'd say about that. One, you're absolutely right. The one thing I would remember in that is the consumer is educated a lot of times at the national level. Think about headlines, think about news reports, things like that. So here's what we want to do. Being aware of what's happening nationally is important to say, hey, you're hearing this about real estate. Let me tell you, going back to Vanessa's comment, what's happening right here where we live or in the market that you're looking. So let's take this topic of price reductions. Jake, you popped that in there about Redfin, the articles, and it's certainly out there, the number of people that are reducing their price on a home for sale. What would I say to somebody right now that's thinking about a price reduction or wondering how the market is? What's your average days on market right now?
Yeah.
What does inventory look like today? Here in June, actives as compared to a year ago, as 2 years ago, whatever the case is. So you can draw in that perspective and help them see this is what's going on sales that you're having in your office. What are you hearing from other agents? What are the average number of offers that are coming on a home right now?
Right.
You know, because that'll help educate folks on what you know is happening in the market with the local information, like Vanessa said.
Thanks, Mark, for correcting the date. That seems logical and probable. So it was somewhere around there, but that sounds good. And here's the thing too, right? Price reduction from what? Right? Price reduction from what? That just means the envelope isn't being pushed as much, right? So you got to be careful. You got to be careful with those headlines, because if the average sale price is 500 and all these people are trying to push 525, and all of a sudden they reduce their price down to 500, well, they're back to normal. So there was the reduction is moot at that particular point. So we just got to be cautious with that.
Your point there, Johnny, is very, very good. If you're not following Keeping Current Matters on Instagram, go do that if you're on Instagram, because there's a graphic that we posted in the last week, probably, the value of pricing your home right.
Mm-hmm.
So to your point, somebody may be trying to catch the market who's out there, who's
Mm-hmm.
having to do a price reduction because they were overpriced. I think that's key. Anything that's priced right in this market is selling very good.
Yeah. Yo, listen, man, I'm going to give you something. These slides, this information that we're talking about, people ask me, I post in Lab Coats all the time. The only thing I really like to talk about these days is video, creating video content, all that other stuff, because that's the world that I've engrossed myself in the past 5 years. And I'm watching the videos that David and other people at Keeping Current Matters are putting out about these different things. Listen, follow them on TikTok, follow them on Instagram. I'm not saying rip them off completely, but I don't think they care if you rip them off, completely, if you're a customer of theirs, right? Be inspired by what they're putting out, because it is powerful stuff. We need to put out content. They give you if you're a subscriber, then listen, try it for 14 days at keepingcurrentmatters.com, right? Try KCM.com and take some of the content watch what David's doing on TikTok and some of the other folks what they're doing. Put out these stories. And I can promise you that if you put this stuff out with a certain level of consistency, people are going to start to look at you in a different light. You're not just another 1.56 million real estate agent, or realtors, if you would. You are actually educated. You're standing out above the crowd. A friend of mine posted something about how many real estate agents are in each town in Southwest Florida. And it was like, wow, 7,500 agents in Fort Myers, right? And 6,500 agents in this town. How do you stand out above the crowd? You want to be able to talk and then roll in not only what Keeping Current Matters is doing, but roll in your local information, because all your boards and MLSs have this information. You can pull reports upon reports. Some of them have it right on their homepage. It's like, April's market snapshot, or April market update. And you click on it. There's all your information. You can use it as a backdrop. You do whatever you want with it. But if you're not vocal about it, if you're not visual about it, how does anybody know you exist, right? Unless you're doing something else. But this is the perfect opportunity for somebody who might be trying to break into doing some sort of video marketing, video social marketing. Here you go. It's all right there.
Absolutely.
If David can do it, you can do it.
The trick, and I certainly think it's been, it used to not be video a long time ago. It's just make a post or something. Today, clearly video is being prioritized on social media, more than other things. Getting the message out there, however you get it out there, is the most important thing.
Yeah, that's 100% it. So listen, y'all can try KCM for 14 days. How do they do that, David?
You go to trykcm.com. Go check it out. We released a new product in the last week that gives you the scripts to record videos with.
Oh my goodness!
An app and a teleprompter and everything. So go check that out. It's called Real Talk. Brings in the graphics and everything you need to make great videos. So
that's absolutely. I'm gonna have to check that out. And then after your free 14 days, it's $1 a day, right?
Yep.
We can actually say less than $1 a day in some cases, right? But it's like $1 a day, man. And y'all spend more than that on your Starbucks coffee. I know you do, or your afternoon martinis. So get the information, man. Put it out there. That's good for you, good for your community, and makes you look like a superstar. So,
Absolutely.
final words,
Always,
David.
Johnny, it's great to be together.
All right, man. Well, thank you all for being here. We'll see you in 2 weeks. Go to trykcm.com and try KCM for 14 days for free. You're going to love it. And try the teleprompter thing. It's right. Is KCM.com. It's right. Or keepingcurrentmatters.com. It's right
Yeah,
there.
you can go in there and check it out. It's called Real Talk. So go
Go-
check that out and see what it's like.
I want to share that with my team. All right, David. Thank you much for everything that you do.
Thank you, Johnny. Take care.